Testing, testing. Happy Tuesday, people. Just going live, so if you don't hear any voice, just checking. If you don't hear any voice. Cool, nice. So we're going to do a stream here for about 30 minutes. Just going to run through my market thoughts at the moment and how that I'm thinking about pair trading as well. Once you're live, just checking with the team that we're good for sound and video. Nice. Okay, let's dive into it. So where are we? So I'm keeping quite a tight watch list at the moment. So just Bitcoin, ETH, Sol, and the rest. I think we talked about it last time, was just like really honing down on how many tickers you're focused on at any given time. And something that I am starting to come of the view is that we are in a bit of a range here that's developing on Bitcoin, and that range is basically going to play out like this. The spikes either side, one probably that comes up here that gets everyone excited at 120, and we just keep trading in some kind of range, which will obviously annihilate a lot of people on their accounts. So this is Bitcoin. Obviously it looks really good on the higher time frames, 3-day, the weekly, etc. I think it's just consolidating, and you're starting to build a bit of a range here. So I'm not one to draw too many of these things, but let's see if I can draw something like this. So yeah, some kind of range that's developing here, and we're just going to keep bouncing around in this, which is absolute chop city for people because they are so used to trading these big candles up or these big candles down, big candles down, big candles up. And I like to think back to what somebody once told me, which is markets are often consolidating 70-80% of the time, and then they're impulsing only 20% of the time. So you've got to be positioned for that. Same kind of story here on ETH. Now, I know a lot of people have talked about this, but a couple of scary kind of divergences playing out, which would ultimately take us back down towards the yearly open around 3,300, 33.37 on ETH. What is particularly scary about ETH is a lot of good news came out today. So you saw eToro doing tokenized stock trading settled on Ethereum. You saw BlackRock an acknowledgement for their state Ethereum ETF, and yet the market just can't catch a bid. And that's in the context of equities doing something like this. So equities have been very, very strong. But again, they're due like a little bit of a correction or something. So equities have had this huge rally, and kind of a lot of the tariff concerns and the Israel-Iran concerns have been put to bed. Yeah, but this doesn't look great for me on ETH, and I changed my mind this morning on ETH BTC, which I previously had been very, very bullish on. So I'd taken this setup on ETH BTC. I'd entered here at 0.0302 or something, and I had my stop loss initially down here at this kind of round number bias. That looks like it's just playing out mid-trend on the ratio itself, and could well resolve up towards this yearly open. My concern was more on the individual chart itself, so I'm no longer in that trade setup. My concern itself was on the Ethereum chart. So I think it's very healthy that we come down to like 3,500 region. We take out all this liquidity here, so a lot of people will feel comfortable having stop losses here now if they were in a long riding all of this up. And clearly there'll be some liquidity down there to take. I'll take a quick look at something like Solana, which is hugging some kind of trend line here. I was really surprised by this Solana move up to 200. Sorry, just saw a comment from the team. I was really surprised by this Solana push up to 200. I was kicking myself for not shorting it. But then again, my initial view was that it was going to get up to 160 and then to short it all the way back down. So I don't see a very bearish, like very bullish picture for Solana, macro context wise, but my focus really has been on Bitcoin and ETH because I've been trading obviously ETH BTC. The other thing to keep an eye on is Bitcoin dominance. So this had been my guiding principle for calling for a bit of an alt season. And what we saw leading up to the past few weeks, I'll get rid of these moving averages, is Bitcoin Dom in kind of this whole period from May onwards was just trending upwards. The play was to really be in Bitcoin. And then once Bitcoin dominance started falling, that coincided with ETH being quite strong. And that move has been really significant. So you've seen Bitcoin Dom go from 66% down to like 60.4%. My view at the start of this week and why I was so bullish on ETH BTC was that Bitcoin Dom was just doing this like bearish back test up here, heading back to like 62 region. And that we were going to get this move down to like 58% on Bitcoin Dom. But then I look at the individual chart for ETH and I see that divergence playing out here. I see the RSI on the daily like way above 70 and looks like it wants to make a trip down south. And I combine that picture with this on Bitcoin dominance, which is it kind of did the bearish retest and then like failed to get any lower here and is trending back up. If Bitcoin dominance comes back above like 62, 63, it's going to be interesting to see if it rejects around there again, and then you can get back into your ETH BTC trades. But for now, I'm pretty happy that I got out of that ETH BTC trade. So the other thing to mention is that we're in the summer, and summer liquidity is really shit. So like on lower time frames, this has just been a bit of a nightmare to trade directionally. If you've been trying to trade anything like ETH or high or anything on lower time frames, it's just been a real kind of messy chop city. And that's because liquidity is much thinner. The market makers, if they want to, can play lots of games. And the main liquidity is wherever there is stops, right? So whenever you see moves like this one get instant slam down, that's because shorts were just getting wrecked down here, and the move back up is just, so that was because longs were getting wrecked on the way down, and here it's shorts getting wrecked, and it's just constantly zigzagging and yo-yoing. It's very hard to play swing trades in this environment, but it does set up the context very well for pair trading. One thing I like to look at for a bit of froth in the market, and there really just isn't, is if I'm looking for short candidates, I'm on Velo here, and I'm screening for what has elevated funding. And things like Fartcoin were still at 50, 60, 70% annualized funding. They've now come down a lot. So finding these short legs is not as easy as it was. So just to reiterate, I would screen by 24-hour funding on Velo, and I would look and say, oh, look, something like Pendor is still quite aggressively longed, Curve is quite aggressively longed, Fartcoin was quite aggressively longed. And then I'd look here at open interest, and I'd say, oh, this is really interesting because open interest on a shorter time frame at 1.2 is still really, really high. So you've got high funding, you've got high open interest, which implies lots of longs. And what's happened since has just been a steady rinse of altcoin OI. And what that takes is the market maker just selling, or like people selling, and people getting liquidated as well. And that's pretty much how the price moves to where it is. You don't see it so much here, like this was a big liquidation week of longs getting liquidated, but these tiny little liquidations to show you how thin liquidity is. All it's taken is like small amounts of liquidity. So people are kind of losing their capital and getting really chopped up, and naturally they're asking themselves, well, what can I do here? So one of the things I like to do when the market is this kind of weak is look for relative values. I'm going to take these moving averages off. And sorry if I'm going quite fast. I've had way too much caffeine today. I'm going to compare some things that are on my watch list. PT, ENA, STT, BNB. I'm going to change the time frame. So obviously on the daily, XRP has done really well over this time frame, but on lower time frames, what's happening? We're seeing stuff like Bitcoin and XRP really start to outperform. and stuff like ENA and different alts. I'm sure if I add a whole bunch of different alts to this, Fartcoin, let's do TIA. Wow, obviously I did them in the wrong place. I'm going to be comparing. You can see that, as expected, the alts have been doing really bad. I just picked 3 or 4 random ones. And the quality stuff has been XRP, Bitcoin, and Hype to some extent. So those would be my focus for the long legs, based on looking at lower time frames, especially today's session was done quite well. So Hype has done okay, XRP's done okay, Bitcoin's done okay. And thank God I was sharing my screen because I was worried for a moment I wasn't. So those are going to be our focus. Let's switch to pair for a second. Put myself in the corner. Right, so as you can see, I have no open positions on in this wallet, but we did say that we want to be long Hype, XRP, and Bitcoin, and we want to start finding some short legs against all of this. So first I'm going to look at XRP, and I'm going to look at something like Pendle, which had quite high funding. Still. So that's an interesting chart. Like if you were to look at that chart and you didn't know it was a pair trade, how would you feel about this chart? It's quite obvious there's somewhere to set a stop loss, which is down here. Funding is okay. Pretty much net, you don't pay anything. And the other one that came up with high funding on Velo was Curve. Again, I'm looking at daily time frames here. And that again it's okay, it's not the best. So let's have a look at this XRP Pendle. And if we wanted to take a risk reward setup on a long, where are we wrong?
Music licensing reimagined.
So we could take like a 3-to-1 setup here. On this, do something like this on XRP Pendle. And the reason why we'd be looking to do a pair trade like this is because XRP has been showing relative strength on the shorter time frames. We looked at the spaghetti chart. Pendle has relatively high funding. I didn't look at the Pendle individual legs, so I am going to do that on my separate screen. And we should, this reminds me, we should add individual leg trading to all of this, or at least charts. Okay, so yeah, I've looked at the Pendle chart separately, and there's nothing to me that suggests that it's right for a short squeeze or anything like that.
Music licensing reimagined.
So let's enter this trade. So we are on and we are connected by default to the Hyperliquid engine. We can route our trades to GMX or the intent-based solver. The intent-based solver has way more underlying. So some of these long tail assets that you might want to short are available there and not necessarily on the Hyperliquid engine, but these two assets are. Now by default, we're going to have this as 50-50. One of the features which we will be bringing out to pair is having suggested weighting. So based on the correlation between these two assets, based on the beta, based on the volatility of these two assets, it might suggest you to be like 53-47 or 40-60 or whatever. But for now, we're just going to stick to dollar neutral. And let's just do a relatively small size trade to get things going. So we can limit order into this. We can TWAP into this pair trade. So if I was to do that over the course of the stream, it would look like this. There might be minimum sizes involved. Yeah, $10 per order. So this order is not going to be big enough, but to do over 30 minutes, but we can do it over 5. And so there, that TWAP is now running. And here I am. So this is going to be $1,000 trade. Already it's done 87 of it because it's over the next 5 minutes. I'm only really TWAPing not because my size is like anything meaningful, but because I just want to average into this trade and show you that's an optimal way to kind of enter this trade sometimes. And then it should start to appear here once the TWAP is running. So that's the XRP Pendle trade, which we will be running and should show up here in no time. Let's go back to ETH-BTC.
Artlist.io.
So ETH-BTC, where I was looking to take profit on this trade was for it to go up to 0.036, which would still be from here a good 12% return. And that would be with some degree of leverage. I appreciate that there's going to be some people that are new to pair trading. So let's talk about how you can introduce a sensible degree of leverage to pair trades. So when I put on a trade like long ETH, short BTC, what is actually happening? I am entering a long ETH perp trade and I am entering a short BTC perp trade at the same time. And when I do that, I'm receiving the net funding in this situation. So because more people are, because of the funding dynamics and because more people are still kind of net long in Bitcoin more so than they are Ethereum, I'm getting paid, I believe, for this trade on, and it will say here, the hourly rate at which you accrue funding is positive, you are getting paid. So I'm getting paid this every hour to put on ETH-BTC, which is a nice thing to say. If I want to do a market order, then obviously we have the same discussion here about 50-50. So now that trade, what that will end up being is $500 long ETH and $500 short Bitcoin. And my collateral is going to be split between the two. So if you think of it this way, if ETH goes up 5% and Bitcoin only goes up 4%, I will make 1% on that trade. And my collateral, whatever I'm making on the winning leg, let's say the market in general goes down, I'll be making money on the long leg, if the market goes down, I'll be losing money on the long leg and I'll be making money on the short leg, and vice versa. If the market's going up, I'm hoping to make more money on my ETH long than I'm losing on my Bitcoin short leg. And so you have this concept of net P&L. And I think this applies most in the context of something like Hype, which has been everyone's kind of darling to pair trade, but it's been a nightmare to outright directionally trade this thing. But then something like Hype ADA has had a much cleaner trend and looks a lot more interesting to trade. So we're going to put a little Hype ADA trade through as well. So if you want to be long Hype and still have some degree of leverage, you see there's 10x here. There's this concept of cross margin. So any losses or gains I make on one leg on the log, I kind of offset with gains or losses on the other one. So Hype ADA is an interesting chart. Hype Sol is another one where I still want to maintain a long Hype bias. But I don't necessarily want to get caught if the market goes down 5 or 10%. And that's really important because let's say the market does go down, which is my baseline case. All I care is that Hype outperforms something like Solana on the way down. So if hype goes down 5%, but Solana goes down 6%, then I'll make that 1% difference. And your collateral, to my point about sensible leverage, is in all those examples I've talked about making 1%. Obviously, no one gets out of bed to make 1%, and that's why you want to dial up the leverage here. And we offer the ability to do 3x, 5x, 10x on some of these pairs, up to, I believe, the highest is 25x on the Hyperliquid engine. We have 60x leverage on the intent-based engine, but obviously you're not trading on Hyperliquid when that takes place. I'm going to do a little hype sol for the stream, and I'm going to get into that trade. And so you can see I'm long hype sol, I'm long hype ADA, and I've still got this TWAP running on XRP Pendle, which should be complete sometime soon. The other interesting reason for wanting to trade on pair is I can look at something like hype sol, and again, with regards to my risk return, I can say that I want to take a setup like this with a risk to reward ratio of, say, close to 1. And then I can set my take profit and stop loss on the ratio itself. So if I was to trade individual legs, obviously I need to be managing a long leg on hype and a short leg on sol. Here I can look at this and say 0.24 is the current entry level. My current entry price was 0.422. I can set my stop loss at 0.219 and see how far away that is, and then I can set my take profit at 0.26. And that's consistent. It's showing me my risk reward ratio, which I'd worked out manually myself. So I'm going to go ahead and save that. That's one of the core features that we offer here at Pair, which is the ability to set a take profit and stop loss on the ratio itself, the ability to send these as a single click trade, the ability to TWAP into some of these trades, and the ability to then, if you so choose, to close it in one trade as well, which is a key thing rather than going and managing all these individual legs as well. So that's how you'd enter a hype sol trade or hype ADA trade, which is two that I've just put on whilst I'm on the stream. Another thing I want to talk about here is going to be the leaderboard. So right now, because we've just launched, the leaderboard has 81 days running, so it's very fresh. It was only launched yesterday, and we have 1.5 million of these high pair points. So you might be asking yourself, what the hell is a high pair point and why should I care about it? So importantly, all your volume and all your trades will register on this leaderboard, and when you do that, and it's heavily weighted towards volume and some weighting towards P&L, and then some things about open interest and things and how long you keep your positions open. But essentially, as you earn those points, they'll be converted to hype tokens at the end. So where do those hype tokens come from? Pair bought a decent chunk of hype way back when it was at 17. So Pair, just to remind people, it takes a fee when you open a trade, it takes a fee when you close a trade. 80% of those fees go to our token stakers, and then the other 20% comes to our treasury. So with that other 20%, we did buy a decent chunk of hype tokens. Those hype tokens are then going to be available as part of this prize pool, or rather the profit that we made on those hype tokens. And anytime you trade on Pair, you will be accruing these hype Pair points, which can directly translate into hype at the end of this campaign. So I think we're the only place where you can directly farm or earn hype tokens. But right now, what I would say to people is it is positive EV to be doing some pair trading, because the macro context is such that everything is quite choppy. It's what I talked about earlier. I'm sure if you've been in an outright hype long, you've felt some of the pain of that. You have these like 5% moves in either direction, and you can kind of cushion that volatility a bit by having a short leg when you need it the most. So if Bitcoin goes down 5% and hype goes down 7%, you need to be in the short leg that will have gone down 8% or more, and that's pretty clear what those are starting to be. You can also average into these trades, so it's not a case that you want to be just hype sol at one particular point in time. I might choose to later come and add to that trade, and I always tell people you want to be kind of averaging into trades and changing your average entry price. So as you start to lose a little bit on this trade, that's the best time to improve your average entry price. And you can see I'm now $200 in this trade, and it's $100 of long hype and an equivalent amount of short sold at this given time. So some kind of basics there, which are enter a pair trade, pick your long leg, pick your short leg, use things like Velo data and to find kind of funding frothiness. Have a look at the charts here on pair. You can choose any asset and it will chart it very quickly for you from the entire order book that's available at Hyperliquid. And once you've done that, then think about how you want to enter your trade, whether it's limit orders or TWAP, and set your size to the intended size of that trade and the leverage that corresponds to that. Then set your take profit and stop loss, and you can use some traditional charting to tell you where you want to set those stop losses and take profit levels. And then you can go ahead and close it in one click as well. And so not only are you going to avoid a lot of the chop that might take place in the market, but you're also going to earn these high pair points, which I think will be positive EV for people, positive expected value for people that choose to participate. Something that's quite fun here, so these trades have started to come to the green, is I can customize my background. So I can, at any given time, choose a different thing to put as my background image. I'm just going to see what I've got available. Let's go and find an image of Vitalik, and I can upload that, and that would then be my background. And these are insanely shareable and memeable, so create your own kind of P&L card and it will have your referral code on here as well. One thing I did hear some people talk about was fees. So Pair does charge this 6 basis point fee to enter a trade and to close a trade. What most people do is they use a referral code. So up here at the top is our referral scheme, and you can create your code here, copy your invite code and send it out to people. And when you do that, you will get 10% off your fees and they will get 10% off their fees as well. So it's kind of win-win to refer people, and it can add up quite quickly. So I've made like 2K already just from referring people from this particular wallet, which isn't even my main wallet. So you can see how that becomes lucrative. The other way to bring down your cost of trading is to have some staked pair. And so when you go to the dashboard, there's this rebates tab. Now, based on how much staked pair you have, you can bring your trading fee discount up to 50%. So at any given time, you'll get a 50% discount off, in my case on this wallet, 30% because of how much staked pair I have on this wallet. And you'll get that discount applied to your trading, and you'll actually be able to claim it. So it's not at the point of execution it's applied, it's actually claimable as a rebate based on how much staked pair you have, and you can claim that at any given time. This also applies on our other engine, on the Sim engine as well. And so having some pair, not only do you get that revenue share, which is all on the staking page, 80% of all fees are paid to the stakers, but you'll also get fee discounts, which you can claim at any given time. There's not like any airpops or anything. And then the final piece is based on how much volume you do, you'll get some rebate between 5 and 20%. And so every month you'll be able to claim some amount of money back from Pair based on your volume that you've traded. So anyone that wants to take a look at all this stuff, it's all in our docs. And specifically how you would reduce your trading fee is just by having a certain number of pair stakes and getting those discounts there. And the same thing with the rebates. Depending on how much monthly volume you do, you'll get a rebate of up to 18% on all your volume done on Pair too. And so I guess the final thing I want to say is on staking, why should you care about Pair and Pair token? So if you buy the Pair token and stake it, 80% of all those protocol fees go to our stakers. And so the stakers are not only eating in terms of earning some ETH yield, they are also generally people that are trading on the platform and are getting these discounts and these rebates on volume as well. So that's everything I wanted to share on today's stream. I think if anyone has any questions, please pop by to the Discord. That's where we have an active community of traders. I will share that because I think it's really important. And the channels that you want to come into are trading floor, where we talk about trade ideas all the time. You may also just want to hang out in pair talk and talk about what's going on with the project more generally, and then anything to do with the token and token price and staking and things, all the discussions are over there. But the trading floor is the best place to kind of live if you are thinking of putting on some pair trades, and ask the community what you think of certain trades, and they'll give you some ideas on what to trade. So that's all. I'm going to wrap up here, and thank you for joining the stream. Cheers.